All right, what is up, guys? So we're back at it with another altcoin watchlist video. Very quickly, this is the BTC chart, but we're gonna skip this. We're gonna go and do a review on the previous five altcoins that we picked from last week. So we'll just jump right into it. So we have Litecoin. Litecoin did pretty well. So the reason that this was on our watch list was the high time frame flip of the 4 hour 200 moving averages, as well as the low time frame, strength. So relative outperformance on low time frames and also shaping up pretty well on high time frames. That continues to be true today. The difference is that this is now more along the lines of like a consolidation pattern. So you would have to see Litecoin break out of this consolidation, maybe back above this resistance level, and then from there we can start to target higher resistance levels, moving forward. Now, obviously, if it breaks down below this consolidation and starts to form a downtrending market structure on these higher time frames, loses the 4 hour 200s, et cetera, the demand zone confluence, all that stuff, then we take it off the watch list. We stop watching Litecoin. At that point, it is a downtrending asset. Doesn't really have my interest, right? The other coin that we had was Monero. So we'll do a quick scan. I actually didn't trade Monero. I will never trade Monero, most likely, but it is performing pretty decently. 4 hour 200 moving averages shaped up pretty well. Also, these higher time frames portraying a high time frame trend. And this is maybe a test of support that is still trying to, find its way upwards. Kind of shaped up similar to Litecoin, kind of like in consolidation, weird choppy-ish kind of market structure on these lower time frames, but still fully intact on a higher time frame, less actionable kind of analysis, right? The other one that we have is Seller. So the reason that I'm interested in Seller is the high time frame trend. When we discuss Seller, it was over here somewhere, right? So Friday would have been over here, right? So when we discuss Seller, it was still uptrending on all time frames, and it continued that uptrend, but eventually it did lose the low time frame trend portrayal of these like hourly 200 moving averages. So once we break below those hourly 200 moving averages, that local trend portrayal, there's not really too much of like an interest for me anymore because the next relevant zone is much, much lower, right? So it's this demand zone. And then ideally, things are shaped up, rainbows, butterflies, and dandelions, textbook fashion. We have 4 hour 200 moving averages confluent with that region when and if we get there. But obviously, that's not the case today. So if you're bidding the 4 hour 200s, you are still bidding high time frame trend, right? You're still bidding strength. It is technically like a winner's mindset kind of thing. But in my opinion, it's just not as ideal as I would like it to be. So for the most part, I'm neglecting seller. And what interests me most would be the reclaim of something like hourly 200s. Maybe you can find a better trend portrayal. So maybe 30-minute 200s. I think if and when we reclaim those, that would kind of set the stage for a bigger rally. And maybe, that you should have been bidding those 4 hour 200s or this demand zone in hindsight after the fact. But obviously, nothing really interesting me as of right now as we slow bleed into high time frame trend support. We can start to regain strength and then pick up momentum back in, that upside direction, then it goes back into the same kind of context that we had for all of this price action, which is all time frames are bullish, right? Just stop arguing bearish arguments, stop looking for, sweeps to the highs or double tops or overextensions on, the 15-minute RSI or whatever, bear divs, right? Stop doing that. Just trade the trend and try and trade, a micro kind of structure along the higher time frame trend, right? So trade the 30-minute 200s reclaim and assume a higher time frame bottom and then look for higher highs, right? So potentially still looking good for seller. But the other two that we have will be the ones that are also on this week's watch list. So we have Mask USDT. And for Mask, the idea was pretty simple. It was hourly 200 MA confluence along with consolidation, right? So we have high time frame uptrend, meaning higher time frame uptrend, right? Than this, we have high time frame consolidation. Obviously, within that consolidation, we're really just assuming neutrality. We're not really, taking bets. It's mostly just 50-50. But in my head, the way that I see it, I'm going to say 51-49 towards the upside. And then when you combine that with confluence, hourly 200s to portray that trend, that sort of consolidation, And why am I saying 51.49 instead of 50.50 inside of sideways? It's because the trend prior is bullish, right? So I just give it a slight edge. I have the confluence. And obviously, if you draw out the setup in actuality, which I think I did, or at least what it would look like in that Friday video. Maybe go check it out. But when you draw out the setup, it's like a 6R trade. And then, that's a winning mindset long term too. So Mask still deserves to be on the watch list. Again, ideally, we are confluently testing this region with hourly 200s now that we have broken out of the consolidation and that we have resumed the uptrend in hindsight. And so this would be an ideal zone to rebid and then bet on continuation from here into the next resistance all over again, right? More higher highs, the same thesis that you would apply back here, exact same thing. Copy and paste it, just at a different price point, essentially adjusting with whatever the trend is doing. So Mask is on this week's watch list as well, and it was on last week's. Did very well. Stacks is going to be the other one. So Stacks is also on this week's watch list. And the reason it was on last week's is because regardless of the low time frame underperformance after having lost this range and the trend portrayal that was likely chopped up to hell within the range, but probably alpha before and then being used as resistance during the downtrend, being flipped, right? We come down into this higher time frame region where when you zoom out, obviously Stacks is still drastically outperforming, is still incredibly strong, uh, regardless of the low time frame, what I like to call snowball of weakness. So we had low time frame downtrend into high time frame trend support plus confluence daily demand zone. That enables a setup for me, and the setup looked exactly like this, right? So this was a step in front of the train, hope and pray for continuation kind of idea, and then look to take profit at the next, relevant resistance, the next relevant resistance after that, and then look for higher highs. And so that played out pretty beautifully. And then we did, actually lose the reclaim of strength. So is it hourly 200s? And it's like, no, not really effective. It's not really showing us anything that we don't already know. And then we go to 30-minute 200s. It's like, okay, well, 30-minute 200s, those are going to be, our low time frame trend portrayal. So maybe if and when we reclaim those, we're ready to, resume the higher time frame uptrend. That's the assumption here. That's the aha moment where you're like, haha, see, I did buy the bottom. I did assume a higher low on the daily, and I was right. But obviously, you lose that strength. So now this is a lower high on the daily. We're still finding a higher low along the same region that you would have placed that bet along, right? The same exact reasonings as to why Stacks was on last week's watch list, still relevant today, but obviously the context has changed because you have a lower high on your daily. So if we lose those 4-hour 200s and that daily demand zone, I would imagine things quickly ramp up pretty bearish. But if we're able to reclaim these 30-minute 200s, then maybe we have a chance to, form another uptrend again, perhaps consolidation as well with, again, higher lows but lower highs. And then maybe eventually a breakout, right? Maybe we form some sort of a range or something, right? There's a lot of scenarios, but regardless, there's still some reason to be interested in Stacks. I would also like to say, and again, this applies for every analysis I will ever do, everything that is applicable towards the upside can be flipped on its head and turned into a bearish argument, right? So similarly, right, when we lose the 30-minute 200s, right, we break down below them, we lose the range, et cetera, et cetera. When we reclaim those exact same things, we break back inside the range. All of a sudden, those bearish arguments on a low time frame flip back into bullish arguments. And suddenly, when you look at the 5-minute, 15-minute, 30-minute, hourly, 4-hour, daily, Stacks is bullish on all time frames, right? So you can flip flop, which also means that if we lose the 4-hour 200s and we lose this daily demand zone and we shift into a downtrending market structure on the daily, right? Because that's a lower high. So if we follow through with a lower low, suddenly you look at your structure, it looks like this, right? That's a downtrend. As soon as that starts to happen, you can use the same things that were relevant for the upside and maybe apply them to the downside as well, right? Obviously, you're always going to use your own discretion and what is portraying the trend the best. So, I'm not going to just arbitrarily say, let's use the 2-hour 200 moving averages if that's not what is most effectively portraying the trend for Stacks when and if we break down below. right? Just like I won't just say 30-minute 200s, but I would imagine if we lose that region, you can start to apply 30-minute 200s and then see, is that going to be the thing that represents or, portrays the downtrend now? The same way that it did for the upside. Pretty effectively and pretty good coin, in terms of strength and also just pretty clean to trade. So potentially lots of opportunity. The other three that I have for you is INJ. So INJ on a higher time frame is breaking out of a pretty key resistance level, the way that I see it. Right, that's kind of how I have it drawn, somewhere something like that. Right, so breaking out of a pretty key resistance level, and you can see it on a lower time frame. Pretty confluent tests around this region, consistently rejected. The one time that we didn't reject, or obviously uptrending across all time frames, and it takes you literally right couple of percentages lower and this little price action right here along with a lower time frame trend portrayal to say, oh, never mind, that's not the breakout of extreme fashion where we're expecting a major rally upwards, right? Because we've seen this negative 5% price action that has lost a local trend portrayal and put us back below this resistance support and turned it into resistance. And yeah, we're probably going to form like maybe a range or maybe downtrend from here, right? Who knows? But who cares at that point? Because you're just not bullish, right? In this case, it's the exact same thing. We're uptrending above a pretty key level. Obviously, any time frame that you zoom into, going to be bullish. You broke out of this range, sort of like a deviation, and then immediately reclaim. So that alone makes you think, okay, back into the range, right? And resume whatever ranges imply. And ranges imply range highs, mid range lows, mid range highs. Here's the breakout. Okay, we're not ranging anymore. Oh, never mind. We're ranging again, right? Range highs, mid range, range lows, mid range, range highs, mid range, range lows. And you repeat that process. So, exact same thing here. Oh, we're probably breaking down. This is not bullish anymore. We're downtrending. Maybe we come, for $3. Maybe we come all the way down to 260. Who knows? Who cares? It's bearish, right? Oh, never mind. We're ranging again, mid range, range highs, and this time we break out of the range. So regardless of the fact that it didn't work the past two times, it is exactly what it says it is, right? We take price action for at face value for whatever it is, and we kind of work based off of that. However, we knock over the dominoes, that's how we're able to play them next. But for INJ, it is appealing to be bullish on this on a higher time frame perspective. It is appealing to maybe look for higher time frame swing longs on a retest of this region if you can find some sort of support as confluence with that idea. And I would say that maybe 30-minute 200s are the most efficient trend portrayal on a low time frame. Sorry. So currently, the most actionable analysis that I have for you, 30-minute 200s, and then scale your assumptions based on those. Are we still implying higher upside on a very great extent, or have we lost the trend? And this is actually, in hindsight, a deviation, just like it was this time, and just like it was this time from the bottom side, right? And from there, you can scale your assumptions and at least say, all right, well, maybe the range continues, and then maybe we pull back into a higher time frame trend portrayal, whatever that might be, and you go from there. So that's my analysis for you on INJ. The other two that I have for you, XRP, which I don't think needs to be discussed too much. It's pretty straightforward. Obviously, extreme uptrend. Not really too much to say here. Flip of the 4 hour 200s, and we just haven't looked back ever since. And then, really, what I'm interested in is what is the low time frame trend portrayal. We kind of just search and search and search until eventually we find something that portrays the trend pretty effectively, so that our puny little brains can, digest this stuff and then hopefully take that analysis and then actually go and trade it and potentially make money off of it. So 30-minute 200 is going to be the best trend portrayal that I have for XRP. And again, similar kind of thing. As long as we're above them, there's not really too big of an argument as to why this is the macro top any more than you had this time, or oh my gosh, that's a lower high on your 4 hour chart, or oh, look at this sweep of the highs, oh, look at this double top, oh, look at this double top, right? Considering this high, oh, here's another sweep of the highs. The RSI is so overextended, blah, 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 it's overbought, and here's this bear div on the 4 hour, and blah, blah, blah. You don't really have much of an argument because you haven't done anything that you haven't done the entire way through, right? So it's not really too notable because you've done everything that you're doing now for the past 53% because you're just above 30-minute 200s, right? The entire way through, you could have just argued 30-minute 200s trend, and as long as we don't break down below those, right? And this is like a fluke, but I would imagine you're hiding your stop below these lows because market structure confluence and maybe demand as well, right? So it's like 30-minute 200s got, you got out traded by 30-minute 200s. How do you feel? So maybe, just maybe, we can use that to our benefit. As long as XRP remains above the 30-minute 200s, maybe we just go for whatever the next resistance level is. And if we can't remain above the 30-minute 200s, maybe this time truly is different and we can finally see a bigger pullback into whatever the next, most notable trend support is. In my head, that is the 4-hour 200s. That's what I would immediately shift towards looking for, but obviously, there's an abundance of supports between that. So if by the time we do lose that 30-minute 200 MA trend and we're breaking down, you're still looking for your 4-hour 200s to get tested, or your bids to get filled or whatever. And instead, we reclaim that strength and we resume the uptrend. You have to adjust. You have to adapt. I discussed this in the Bitcoin video that I put out a couple days ago, where based on the breakdown below the range, we're looking for a deeper pullback into our higher time frame trend. But we also said if we deviate back inside of the range, that means that we have to stop diverting our attention towards a deeper pullback and instead look for a bigger push upwards and continuation of the trend on all time frames. And that was that deviation, that purple box at the beginning of the video. And that was the reclaim. And this is the higher high in your higher time frames, right? So analysis, point proven kind of thing. It worked out beautifully. Even if it didn't, I would adhere to that mindset anyways, because it's a winner's mindset over the long course. So the last coin that I have for you is ADA. And this is pretty strong on high time frames as well. I believe 2-hour 200 moving averages are doing the best job of portraying the trend on a high time frame. All right, so I'm talking, very high time frame, and as well as locally. So 2-hour 200s, but then the caveat becomes, okay, well, we didn't care about them here, right? And then they got chopped up to hell here, and then only finally, starting this price action and then that test, did we start to care about them again in similar fashion as we did for all this price action prior, right? So what exactly was relevant to us back then during those times when our beloved 2-hour 200 MA trend portrayal was not relevant? And right, and then you ask yourself that question, you dig in deeper, and I'm going to go ahead and say 30-minute 200s. So whatever the trend is on the low time frame, kind of going to be portrayed by the 30-minute 200s, and then we can use that to scale assumptions into the higher time frame trend, right? So downtrending all the way through below 30-minute 200s, reclaiming something like 2-hour 200 moving averages as a result of having previously snowballed from reclaiming the 30-minute 200s. And then from there, okay, we're allowed to see a deeper pullback. This is where it kind of gets choppy, right? But this is a resumption of the uptrend because you reclaimed your local trend portrayal, right? And then only after you lose that, you get that deeper pullback. And then same thing, right? Resume it, reclaim that trend, and then see a much bigger push upwards in confluence with that higher time frame trend. Lose the 30-minute 200s again. Oh, look at that. This is the time we pull back much deeper and then reclaim again, right? So bet on low time frame trend continuation is, a viable option. And then in the event that we lose this trend, we can then look for that deeper pullback, because if you ever wanted to build a snowman, you have to start with a snowball first. That's just how it works, right? So if you ever wanted to see a pullback into the 2-hour 200s, or your triple top fantasies come into play, and you just hate Cardano so much and we go to zero, you have to lose the 30-minute 200 MAs first. So I would imagine kind of like a math equation in grade school, where it's like, instead of telling you 5 plus 2 equals 7, it's like, hey, little Timmy has 5 apples. Samantha gives him 2 more apples. how many apples does little Timmy have, right? It's like that. You take the words, you kind of process them in your brain, and then you use that to take action off of. So if you understand that you cannot build a snowman without building a snowball first, and then you understand 30-minute 200s are pretty relevant, so are 2-hour 200s on a higher time frame, so is higher time frame market structure, right? All those kinds of things. I would imagine you can take those arbitrary thoughts and apply them to the chart, and then hopefully put it into action via your own trading, execute off of them, and then have the emotional discipline to see that trade through and manage it in an efficient manner over the long course of time, right? So hopefully that is the case. And yeah, that's the end of the video. I am doing a Bybit giveaway for the month of March. So if you're watching this as of March 31st, the day that this video comes out, you have all of the remainder of today to sign up to my Bybit referral link to potentially win an iPhone 14. I'll be announcing the giveaway winner tomorrow, maybe through Twitter. I'm going to try and keep my Twitter not as clunky with this stuff. Um, if I put out a video tomorrow, which I'm thinking about, then I will announce the giveaway winner in that video in the description, or I'll just tweet it out. We'll see what happens. But yeah, all you have to do to be eligible for that iPhone 14 giveaway is register a Bybit account under my link. Link is in the description, and then deposit $100 and then take at least one trade. So that last part is pivotal because some of you have signed up, some of you have signed up and deposited, but not all of you have signed up, deposited, and taken a trade. So therefore, you're not eligible, right? So thank you guys so much. I will be doing more giveaways in the future to anyone on my Bybit referral link every single month for the rest of the unforeseeable future. So if you guys are interested, then yeah, maybe sign up and you might win some free stuff. It might be pretty cool. And it also supports me a ton. I do make these videos for free. I think for my entire lifetime, I've made like $12 from YouTube ad revenue. So really cool, right? Yeah, time to retire. But no, in all seriousness, thank you guys so much. I hope you have a great weekend. I hope you're getting value from these videos and from just me, on Twitter and whatnot. But yeah, thank you guys. Thank you, thank you, thank you. Much love. Take it easy.